Hey folks, Alex here, 95 to Freedom. In today's video, we're going to cover what happened in the market today, give an update on the portfolio, and I'm going to read through some comments and give you some replies. I think that will help out a lot of these questions that I've been getting. So let's dive into it. If you're new to this channel, my name is Alex. On this channel, I document my journey investing into high yield dividends that will one day replace my day job. So if you like to do the same, follow me along on my journey, click that subscribe button, and leave a comment. A comment really helps the algorithm to build up this channel. So that is the least that you can do to support me. Okay, we'll talk about the market real quick here, folks. Today, Amazon beat its earnings. It was an epic day for Amazon. I think they were up like 12%, I believe. Let's see where we landed for the evening. All right, yeah, 12.9%. So, yeah, pretty crazy. Today, the markets were choppy, folks. We had, our president's in Asia. He had a meeting with Chinese President Xi, and everybody thought, with some normalization on this tariff, cooling down the tariffs and everything like that, that we would see some kind of market hype, that we'd see some kind of positive direction in the market. But instead today we saw a little bit of a sell-off, which was a bit surprising for me. But it is what it is, and we take whatever we're getting, right? So the futures right now are green. Everything kind of bounced back. I'll just show you my portfolio. Today I was down like 5.5%. Okay, quite a bit of a dip. Now we see this aftermarket recovery. So the thing you got to do is not panic. So what did I do today to kind of help out with this recovery? Well, a couple of things. I did end up using a little bit more margin. I ended up picking up some more shares of Wpay. I got up to 4,000 shares. And then I picked up a few shares of Eggy. So, I kind of gambled with that. I figured, there'll be a recovery post market close with all the earnings coming in. So I wanted to help that recovery process, and we've recovered pretty much everything but like 1%, even less than that. So by the time market opens tomorrow, hopefully everything bounces back. Am I going to keep all that margin? Probably not. I'm going to look at my portfolio tomorrow and see what I want to do. But yeah, I'm currently right now, I think I built up my margin up to $96,000. And not using a lot of margin gives you flexibility for operations like this. Obviously, this is a lot of risk where you don't know if the market's going to continue to go down or not. So it's one of those things where, you kind of have to do it at your own risk. But let's just take a look at the Wpay tracker. These are all the stocks that Wpay tracks. And look at this. Amazon up 9.21%, Google up, Apple was up, Netflix. Netflix said that they're going to do 10 to 1 or 1 to 10 on their Netflix shares. And Berkshire Hathaway was in the green as well. Some of the largest losers was Facebook, Tesla, and Microsoft. Okay. All right, so that's what we got on the portfolio side. Now, tomorrow I'm going to receive the rest of my dividends for this week, so I will consolidate all that. I use this dividend tracker. If you guys want to build your own tracker, I have one of my videos. I walk you step by step how to make your own customizable tracker. It's absolutely free. Make sure you check that out. Okay, so let's dive into some community comments. I figure this might change things up a little bit. So we got a comment here from this person, bhale1281. If I have 10,000 account with 10,000 margin, how do I make sure I'm using margin when I buy ETFs? Great question. So basically, if you deposit just $10,000 in let's say cash, and you haven't bought any stocks or anything, and you enable margin, well, it's always going to use your cash balance first whenever you place an order. You really don't get to pick, at least not in Robinhood. So what happens is once you spend that $10,000 into different funds that you want to invest in, every single purchase after that will be within margin. And if you do any type of like short-term trading or anything like that, you always want to use the margin for that. So how do you make sure you're using margin? Well, if you invested $10,000 into ETFs, every single dollar after that will go against margin automatically. Okay, next question we got here from Evan Watson 2798. How long is the wait for the Robinhood credit card? And do you have to pay for Robinhood Gold subscription before you get it, or can you apply for it before you pay for the subscription? Excellent question. So just background, I know I've seen multiple comments where people are kind of shocked because I got my gold credit card and people haven't got it and been on a waiting list for over a year. I'm not sure how Robinhood does it. I had a Robinhood account for probably over a year that was kind of dormant. I had like $100 in it. And then back just this summer when I moved over from Fidelity is when I really moved all my money and stuff. And at that same time, I requested to be put on a waiting list. My wait time was, I would say, less than a month before I got it. And I did apply for Robinhood Gold because I moved over my money from Fidelity and I wanted to capitalize on, the lower margin interest rate and everything that you get with Robinhood Gold. So I'm not sure if that would help you or not. I don't know if they look personally on like, say how much money you have in your brokerage account. I have no idea. That's a good question. But I happen to get it. It's an amazing card. I hope you get yours soon as well. Maybe reach out to them. Maybe they might be able to give you some information. Next one here from Brad Long. Did you happen to get margin call or wreck during the last liquidation event a couple of weeks ago? How did you fare? Maybe you already done a video about it. No, I didn't get wrecked or margin called. We had a pullback a couple weeks ago. I think my account was down probably like $10,000. Very similar event to actually what happened today. So no, I fared pretty well. One of the things you want to do is make sure you have a good cushion on your margin. So over here in Robinhood, you can explore your margin, and this will tell you your margin maintenance requirement and the buffer that you have. So I've always had at least like a 50% buffer at all times. So that really helps you withstand corrections up to like 30%. If you want to be safer, withstand like 40%, 50% correction, I would say somewhere between 20 to 30% margin is all you want to use. That means like if you have $100,000, I wouldn't use more than $30,000 on margin. So I fared out okay. Congrats on 5,000 subscribers. Thank you very much. Life of a boring old guy. I love that username. Okay, these ETFs are for income, not appreciation. The calculation is the profit from the numbers of the shares the person reinvests greater or less than the price erosion in 1 month. Fair statement there. Yes, this is what we want to do. How much did we pay for it? What we got in dividends, and how much is the stock worth? So in this video, I talked about ULTY, how a lot of people got burned on ULTY because it was eroding faster than the dividends that they were receiving. So in that scenario, if you got in ULTY at like $6 and you saw it going down to $5 and you're getting your dividend, but you're still more red than the dividend you received, then yes, that would not be a great income stock. Undecided for now. I may hold ULTY till it fully winds down. Okay. Let's see. So many funds. It is 100% ROC, but are they even classified as such for tax treatment? So return on capital. I think there's a lot of misunderstanding in the community. Return on capital is the way they structure these funds. Basically, if if they give you more ROC, you'll pay less taxes, right? So return on capital, you won't really pay taxes on it. And I think there's like a period of time that they do, mostly ROC, and then they start giving you actual gains that you'll be taxed on. So this is my first year going through this. I'll be doing taxes in January once this year winds out. I'm curious to see how everything's going to work out, since the amount of stuff I did this year, I'm a little bit overwhelmed about that. Pro tip, watch at 2 times speed. Thanks for the info. I'm sorry if I sound a little bit slow. Dude, good luck to you. I hope everything works out for you. Wpay just launched last month. That's essentially zero track record. I hope Wpay isn't as bad as ULTY, but to me right now, there's no way to know that. I already responded to this. Basically, to borrow music, Wpay is a fund of funds, so it's holding the weekly leverage funds that have been around for, I believe, at least a year now. And it's basically just a basket of them. So if you check out Roundhill's performance of those funds, and you think that you'd be okay investing in them, basically Wpay is just holding all of that. And I think the biggest thing is the underliers, which I talk about when I show you these trackers. It's one of the reasons I made this watch list for all the underliers. Okay, so this is the plays for Wpay. Okay, so if you believe in these companies that they're going to be around for a while, I don't see why you would say that doesn't have long enough track record. Okay, so next one question: if I was to establish, say, 2,000 share position and hold it for 5 years, you'd eventually get your money back and then some, right? I was kind of being funny on my response, but this is talking about ULTY, right? And I covered this in the previous video. Basically, I think when I got into this stuff, and I was listening to some folks on YouTube, and it never made sense to me. Okay, so let's say you got into a fund that continues to decrease. As long as you hold on to it, will you just get money indefinitely? And I think I've covered this in nauseum at this point, but basically, you're always going to be paid at the expense of the NAV, the net asset value. So as that continues to go down, so does the dividend that you're going to be getting. So if ULTY is at $5 and you're getting 8-cent dividends, by the time it goes down to $1, most likely it'll probably get delisted at that point from most of the brokers. But let's say it doesn't, you'll be getting like a one penny a week type of dividend. If it goes down to a penny, then you'll be getting fractions of pennies in dividends. There's no way, these aren't like unicorns, okay? This isn't magical funds. They have to pull money out of somewhere. So yeah, that's my answer on that. This is called interest arbitrage. Only works when dividend rate's higher than margin rate. Exactly, yes. This is talking about how to live on a margin. All right, let's see what else I can cover here. I have all 3 egg funds, all have performed bananas. This is when I made that video about Eggy. I talked about Eggy, and they also have eggs and EggQ. So this person is holding all 3. Awesome. Let's see. Great time to be a dividend investor. Yes, I think, with everything that's been, all the changes we've had in the last few years, with the invention of smartphones, invention of all these apps, how easy it is to use all these brokerage, all these funds that are at our fingertips, all these different fund managers that are using creative ways to extract dividends for us. I think this is a very amazing time. Okay. All right. Well, I'm not going to read through all of them. There's a lot of different comments here. I'm just going to pick a couple more, and we'll wrap it up for today, folks. Let's see. So you're using margin responsibly to achieve 65% annual return with almost passive investing. Warren Buffett should be ashamed of himself. You are beating Jim Simon in his grave. In 20 years, you'll have $5 billion, and in 30 years, you'll be richer than Elon Musk. By year 31, you'll be a trillionaire. Congratulations, you cracked the holy grail of investing. I think this person's being a little bit cheeky. I've made a very similar comment before on somebody else. Um, there's folks out there that think that like these gains that we're getting are indefinite. Okay, and the 65% annual return, I think he's pulling that from one of these calculators that I have here. Let's see if it was. Well, it was one of these calculators where I had the ROI. At some point, I had it at 65%. It's probably back when I made this video. Now, um, part of the reason this ROI gets inflated is when you use margin, right? So if you look at ROI from a standpoint on return on your money, if I'm putting $1 down and I'm borrowing $1, well, as long as you have appreciation, you're going to be able to double that appreciation because you're only using $1 of your own money. This is similar calculation that is used in real estate. If I purchase a property, let's say that's $100,000 and I put $20,000 down, well, my ROI is going to be calculated not based on what I've borrowed from the bank, the rest of 80,000 plus my money. It's always going to be counted on the money that I've put down. So that's a very similar calculation in this scenario as well. Now, I will say that there's no way that we can go year after year with a 65% annual return. I mean, there have been years in the market where we had like a 20, 30, 40, 50% year to year back to back. But there's always going to be bear market years where you're going to have negative returns. So I don't think I ever claimed that I beat Warren Buffett or I will ever beat Warren Buffett. But all of my calculations are projections based on current calculation. So I can't, this is what my calculator spits out. Based on what I'm seeing right now, the dividends that I'm getting, and the annualized gains that I'm getting from these dividends, that will be what I'm tracking towards. Now, if those dividends decrease and let's say something happens in the market, then the calculations will vary. Now, after we have a track record of, let's say this year is over, I'll be able to go back and I can see, okay, this is everything that I've held, how much I've invested, how much I had left over, and what I made in dividends, and what was actually my ROI. So I hope that I'm clear on that. Okay, so hey, let's see here. $5 footlongs. Your thoughts on PLTY or NVIDIA? Okay, I've had those funds in the past. I'm not into single funds very much, especially from YieldMax. My bro, ULTY is not designed to raise its NAV, it's designed to give you total return. Go back to the stats. It's up 17% total return since it came out. Simple math. It's the best investment ever. No. But if you bought ULTY and held it, you would be up. Okay. Sure. I think it all matters when you buy in. But by just comparing to other things like SPY, which I did in this video, you would have been much better. Okay, let's see here. I cut the dead weight months ago. That's funny. You cut ULTY out. NAV lives matter. That's funny. Okay, here's a good one. What's your fire amount to quit your job? And I replied to this. Okay, so I haven't really covered that too much on this channel, and that's one of the reasons I've made that post for you guys to vote. I have other things that I want to cover on this channel, or I'd like to maybe possibly start a second channel that's going to be geared towards like saving money, actually like how am I going to achieve this financial independence, early retirement, and possibly even talk a little bit about my real estate experience. Right now, that poll is, I believe it's 50-50. Okay, so this post, it's funny. You guys are completely divided in half. Keep this channel only focused on dividend 50%. Expand the scope on this channel to cover real estate, money, and financial independence journey 50%. So I got 180 votes, and they're exactly split in half. So I'm not sure what I'm going to do, but let me answer this question here. What is the fire amount to quit my job? All right. So my calculation is I'd like to make somewhere between $100,000 to $140,000. That will sustain myself and my family. I have, kids and stuff, and they're still a young age. As they grow older, they're gonna have larger expenses. They're gonna need cars, go to college, do all that kind of stuff. So I don't want to, live, paycheck to paycheck. So I do want to build different streams of income. So right now, I have income from real estate. I got income from these dividends from my employer. And right now I am, slowly starting to make a little bit of income from this channel. So ideally in the future, I'd like to make most of my money from real estate, from dividends, from YouTube, and then possibly do something else. Now, that's something else I'm still thinking about. One of the things that I think folks who are like younger, like let's say before they're 55, and I would fall in that category, those folks who dream about like retirement, oftentimes they focus on the 4% rule. And that basically means that you have to save whatever you're spending each year. You have to save 20 times the amount in order to indefinitely live off of it. So if you need 50 grand a year, you have to multiply it by 25, which would be like $1.25 million. And so they're striving to achieve this number so then they could live off the 20, from the 4%. I, however, look at it differently. Like my main goal is to have my schedule back. Like if I want to go on vacation, I can go on vacation. I don't have to ask my boss. I don't have to worry about coming back and answering hundreds of emails. I want to have my time back, and I want to do my own thing where I can be creative, like this channel. Like I am my own boss. I can be creative, and I think that is probably a better path. Like you want to be financially secure. You want to have enough money sacked away so that you could risk and do something that you would actually enjoy. And for me, that's what I'm looking to do. Like I'm looking to have enough money set aside to pay down my debts and to have this passive income coming in. And then I'm going to focus on doing other things that will make me money and I will find joy in, and that will allow me really to be free from my job. So that is my target, somewhere between 100 to 140. Like this next 12 months, I'm really focused on paying off debt. I mentioned that in the past, and that's one of the reasons I'm not reinvesting. I'm not dripping. I'm not paying down margin. I'm taking all my distributions as much as I can in order to pay down my debt. So I hope I answer that question. Any reason you SAG BTCI? Asking for a friend. Yeah, so I sold off all my Bitcoin when I saw it was nosediving. So I got out of it. I feel like I got out of it good time. It's still teeter-tottering. I don't know if we're gonna go down to 100,000 on Bitcoin or not. I think we were down to like 107 today. So let's see. Oh, we're up to 109. Oh, I almost missed the train. Yeah, I really like to get back into it, but I was really just reshuffling my portfolio to make room for Wpay. Okay, so I think this video is long enough for today. I hope you enjoyed it. If you did, please leave a comment below. I try to get to everybody's questions, and subscribe if you haven't yet. We'll see you on the next video, folks. Take care.